Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And today's topic is how to finance my ADU, my accessory dwelling unit. I often get calls for people looking to finance their ADU. Most of the time, it's in their backyard. But also, there's a handful of investors, actually more than a handful of investors. There's a lot of investors that are buying properties with detached garages and converting them to ADU units and so forth. Now, with the new legislation, it's becoming easier and easier. And I think obviously this is a trend that's going to stay, where we're able to add more units to our property, rent them out, cover our expenses, cash flow. And that's a strategy for a lot of people that maybe couldn't have retired, but now they're able to because they have the detached garage that's bringing in $2,000 a month income. But how the heck are you going to finance these ADU units, right? How are you going to finance them?
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
How are you going to finance them? So you have your traditional HELOC, which is a home equity line of credit, right? You could also get a closed-end second deed of trust on your property. That's based on today's equity, right? So if you don't have a lot of equity in your house, might not be an option. Obviously, you can cash out refinance if this is an owner-occupied property. But what are some creative ways to finance these structures, right? Because they could be anywhere from $50,000 to $250,000, and sometimes your people are building multiple units on a property. I know a lot of investors, they're getting triplexes and fourplexes, and then they're able to build in the basement, add an ADU unit there. Maybe they're converting a garage, right? There's lots of options. There's a conversion, plus there's also building ground up or bringing a prefab type building onto the property. So there's all these ways of doing it. The question is, how can we finance it? So what I like is using the ARV approach. So let's say you have a triplex and you're able to, code allows you to put 2 more units in the back. And so you have plans to do like a attached 2-unit building. And then what we do is we get a future appraisal, right? A subject to completion appraisal, which says when this is built with the 3 units and this is rented out, now you have 5 units, it's going to be worth X amount of dollars. So I have lenders that actually lend off the subject to completion value, just like a fix and flip loan. And let me go into that a little bit too. If you're converting a detached garage or something like that, or you're building a secondary unit, you could actually get fix and flip financing for these if it's a non-owner occupied property, because those fix and flip lenders lend for business purposes only. However, now, if you're doing a structure in the back strictly for business purposes, meaning I'm building this to rent out, and it's just for business, you can sometimes get owner-occupied private money loans for these type of deals. But what I would look at, if you're sizing this up for an investment, either you have a rental property you want to add ADU units to, or you want to put one in your backyard, is, okay, what's the value going to be? How much am I putting in to build this unit? And what's the after renovated value of this property collectively? Then you can get private financing, because they'll lend up to 70 or 75% of the ARV. So you can almost get a construction loan second. So the one way I've seen it structured was they had a low loan to value bank debt. So they had a mortgage with Bank of America or Chase, a fixed rate, and it was let's say it was $1 million property, and they had a $550,000 first at 2.25%. They don't want to trade that out, but what they want to do is they want to tap into some of their equity. Maybe they don't have enough to do a traditional HELOC. There's some private lenders who will actually go into second position and fund the construction like a construction loan in phases as progress is made in the construction process. So that's another way. The other thing I'm seeing a lot of is people buying or own 3 or 4 unit properties, and city allows them to build more units. So essentially, when they're done, they want to put 4 more ADU units on the property. They're going to have a 8-unit property. Well, then it's actually a commercial loan. So you can do a bridge loan, which takes out your first loan and gives you the construction funds to build the property. And then once you stabilize it, now you have 8 units and they're all occupied. We're gonna look at it as a commercial loan. So we're gonna look at it from an income standpoint, so that you can refinance with a commercial product. So it's a 1 to 4 unit when you start, but then it's 8 units. So we're seeing a lot of things like that happening, and I think that's where a lot of these infill projects where you can make a good return on your investment by finding these infill where you can add more units to the property using the new legislation allowing for more units on properties and zoning and all that good stuff. So check with your city, check with a local architect who's doing these. There's a lot of prefab companies popping up right now. So it's a really good time to get into ADU units. And then we could talk about financing as we go. But there's just a couple ideas. Obviously, you could tap into your equity if you've got some. Some lenders will allow for you to use ARV, which is like finished value, and they'll do it on draws like a construction loan. There's unsecured term loans you can get. You can be really creative. Sometimes some of these prefab builders are actually financing the units themselves, and then all you have to do is the site work and the soft costs. So maybe get a unsecured term loan or so forth. So there's lots of options. Hope you enjoyed this on ADU financing. Please subscribe. Please share this with a colleague, and I'll see you on the next episode. Thanks for watching.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.